How do you access the money invested if you need to? That depends. So sometimes when you've invested in a real estate project or a business, your money is not available to you. Your capital is not available to you until that thing is sold, until they exit. So that's something for you to know as you're going into a project.
Be the change you want to see. Make a difference by giving your money a purpose, a mission to do good. Welcome to Money with Mission, where we show you how to create passive income so that you have options for how to work and how to live your life while leaving a legacy of positive social impact.
Welcome back to Money with Mission. Got some more questions from you guys? Here's one. This is a kind of a long one. How much do you have to invest? How quickly do you see a return? How do you access the money invested if you need to? So, how much do you have to invest? That just depends on what you're looking to invest in. If you're looking to buy a property on your own, you don't have full on cash, so you have to get the money from the bank, you'll have to have whatever down payment the bank wants you to have if you don't have any other ideas on how to purchase a property. So let's say you see a property and all you know is to get it from the bank and all you've got is $5,000 and that property is $200,000. You're not going to be able to get it because the bank's not going to loan you. I don't even know I can't even think that percentage is fast enough, but that's not a high enough percentage. You need at least 10% and sometimes 20% for an investment property to be able to get into it. But what if you knew that you could talk to that owner and maybe have a conversation with them and they're willing to take $5,000 and let you take over that property, and then you can rent it. They're ready to move. They don't care. And they'll even carry the note for you. In other words, they will be the bank. So that's another opportunity, if you know about it, to get into a property. If you need $20,000 to get into that property, $40,000 to get into that property, and you have 5 and you have 6 other friends, how many friends do you need? 5 times 8 is 40. You got 5 other friends and you can put it all together. You've got to form an entity. There's some things you got to do there, but that lets you get the property. All right. So there's different ways to get things. So how much money do you have to invest? It depends. The more, the less you have to have. How quickly do you see a return? It depends. So if you've invested with someone in the syndication and the paperwork, the PPM, which we'll go into what that is when we start talking about investing, will define how soon they expect to get your return. If you're investing in equity, it may be one thing. If you're investing in debt, that will be another thing. And it just depends. It's all spelled out. So when you make your investment, you want to ask who you're giving your money to, when should I expect to see a return? They will also tell you, and that whole thing is we send out checks monthly. We send out checks quarterly. We send out checks yearly. So that's when you will see a return in that. Now, there's always the possibility that things don't go the way the sponsor expected, or if you're the sponsor, it doesn't go the way you expected, and that return is delayed. The most important thing to happen there is communication. If you expected to get a return, start seeing some money coming into your bank account in 6 months and nothing's happened, and your sponsor hasn't spoken to you or like what's going on, that's a problem. Pick up the phone, give them a call. That's intense right there, because you got to know that you can call this person and you've got to pick up the phone and say, hey, what's going on? Okay. How do you access the money invested if you need to? That depends. So sometimes when you've invested in a real estate project or a business, your money is not available to you. Your capital is not available to you until that thing is sold, until they exit. So that's something for you to know as you're going into a project. There may be stipulations to where you can sell your interest in the project if you need to get money, but that may be on you, or it may be on them. They may say, hey, you can get out, but I got to sell your interest. And that if you invest in a real estate or business project, your money is not very liquid. Okay, bottom line. You may have it tied up for 5 years. If you're going to need your money in 3 years, you definitely don't want it tied up for 5. And so the shorter you can have it, you may make less, but you want to plan out, is the bottom line, where you're going to need your money. And if it comes to a point where there's an emergency, you need to access it, you call your sponsor and say, hey, I've got this thing that came up. I got to get my money. And it still may take 3 to 6 months to get your money out. We got more of these questions, so keep them coming, okay? I really love this. The question is, what do people mean when they say, I made good investments, as a way to explain how they are living well? Does it mean they invested and take the money that they make to live? And does it mean they invested and they take the money they make and live on it? Well, I guess it depends on who you're talking to. People sometimes say they make good investments and have no idea what they're talking about. Sometimes they're talking about their 401k, and they probably made no investments on their own. They just put money into this box and somebody took it and invested it for them and they got lucky. So they've retired now and they're pulling money out of this pool of money that they have, and it lets them live the lifestyle that they want. Sometimes they've invested in things like real estate on their own, businesses on their own, or not by that outside of Wall Street. And so they may have done very well with that and turned that money into, so they invested $100,000 into a project. And when they got their money back in 5 years, they had $200,000. Plus they made, I don't know, $200 every quarter as they went along. So they made money. Then they took the money that they had and they invested into the next thing. So now they've got $200,000 to invest and they put that back into something else. And that came out to be another $500,000 in 3 years. So as they go along, they're just increasing their capital, also taking some off the table, putting some away into some other type of investment, a little more liquid possible. And by liquid, they can have easier access to it, and they keep investing. So now they're taking the money that they've invested, whether it's just the return on the investment or they've got the capital because the original invested capital, because now they're out of the investing world. They've just got it sitting over here in a bank account. So they're living off of that. Or it could be that they have that 401k like we talked about at the beginning, and they're living off of that investment because they got lucky. Stock market investing is, in my opinion, and you guys know how I feel about it because we can't control it, is very much manipulated unless you're really into trading and are really focused on it, which there are people that are and are very good at it. It's just not me. You get lucky and you have your money when you retire and you get it out of the risk things, which also can mean you make less money and have less to live on. And then you live off of that way. You're pulling money out on a regular basis. I hope that makes sense. It's a little kind of a technical question, I think, and it can be a little wishy-washy, but sometimes people say things and you really don't know what they mean when they're saying it. That's the bottom line here. You have to ask more questions about, what do you mean by that? What kind of investments did you make? And how long ago did you make them? And who did it for you? You did it yourself? How did you know? There's just a lot of questions behind that. I made good investments, so I'm living well. All right, you guys. The other thing to know is that the majority of the wealth in the country, in the United States, is made and preserves in real estate. Okay, tangible assets. You can make your money however you want. Put it into something that you can look at and hold. Okay, that's it for today. Hit subscribe. Talk to you again soon. Bye-bye.
You've been listening to Money with Mission. There are projects happening right now where you can have a great financial return while positively affecting the lives of others. To learn more about our opportunities, go to moneywithmission.com.